Hey, deal makers, welcome to the show where it's all about financial freedom with real estate. Let's do this. We're talking about scaling your real estate portfolio. That's what we specialize in, helping people scale beyond flipping and rentals into multifamily apartment buildings. And one of the reasons that people are held back is capital, of course. Is the biggest concern is, my gosh, how do I get the capital to pay for all this stuff here? So I want to talk about raising capital here today and really the secret to raising capital and kind of what that looks like. And we'll get into that in just a second here. Big shout out to Derek Lind, one of our students. And he was been working with one of our mentors, Jonathan Nichols, just closed on his first multifamily deal, 118 unit near Oklahoma City, all while working full-time as a structural engineer. So congrats, Derek and Jonathan, for putting that deal together. If you want to hear more stories like Derek's, we actually compiled all these case studies on our website. It's at themichaelblank.com/wins. And I think it's really going to inspire you to see how many different people from all walks of life have been doing deals here over the years. And so congratulations again. Check that out if you wanted to get some inspiration here from people that have been doing deals as well. So with that, let's talk about one of the main objections of getting into multifamily and scaling with real estate is the access to capital. When I talk about raising capital, people kind of say, oh, well, that's really cool. I want to get to that, but that's not really for me. I'm not really ready for that. I don't know how to raise money. I don't know anyone with money. Why would anyone invest with me? I don't want to beg my friends and family for money. I can't find people with money. I can't raise money without a deal. Investors won't take me seriously because I don't have an apartment investing track record. And so the myth really is all these things. It's really exactly what those myths are. In fact, the truth is that learning capital can be learned by anyone. And it doesn't take very long. Within 30 days, you know how to raise money. You don't have to beg, borrow, or manipulate or sell people on raising money. And so one thing I will talk about is, why would anyone invest with you anyway? Like, why would anyone listen to you when you're trying to raise money? And so one of the main reasons is that stock market investors, they're kind of dying to speak with you right now because even though they have money, they have certain challenges with investing in that money, which is typically going to be in equities, stocks and bonds, ETFs, mutual funds, that kind of stuff. And they're dealing with volatility, uncertainty. So even though the stock price over the long run, like 20 years, obviously goes up, in the shorter run, like 5 years, 5 year, for example, there's a lot of volatility. If you look at a stock chart, the S&P or the whatever, a lot of volatility. So if someone is trying to, for example, pay for college and they need to liquidate part of their 529, or they're getting ready to buy a house or a car, or they're about to retire, they need to sell some of the equities. And if it's in a correction market, you don't want to do that. And so it makes financial planning very difficult if you're dealing with volatility in the stock market. That's issue number one. Issue number two is that there's really not a lot of cash flow. Unless you're doing some very advanced stocks and options trades, the stock market really doesn't pay cash flow, which means that I can't use it to actually exit whatever I'm doing, my W-2 or my business. The only really way to use a stock market as a retirement tool is if I actually save and invest a lot. And financial advisors will tell you to use a 4% rule, meaning that you shouldn't sell more than 4% of your holdings to live off of. Otherwise, you will start depleting your principal and run out of money one day, right? So 4%, what is that? Well, if I want $80,000 per year off my stock portfolio, then I would need a $2 million portfolio to actually be able to do that and not run out of money. Okay. So how many people have $2 million invested? Not a lot of people, right? The average savings rate for a 65-year-old family is $175,000, excluding some of the value in their house, which could be more, but it's not near $2 million. And so you look at your own investing and savings activity. When are you going to be at $2 million? And you might actually want more than $80,000 per year, in which case you'd have to save even more. So stock market investors have this problem where it doesn't really pay the cash flow. And then they pay too many taxes. Every time they sell something in their portfolio, they got to pay fees and taxes on that. And then it's very, very little inflation hedge. So we saw that recently in this run up of 9% inflation, for example. The stock market didn't go up more because of that. It did what it normally does. But meanwhile, inflation is eating into those returns, right? So if the average stock market return is 8% and inflation is 8%, well, that 8% return, you're just treading water, for example. And so you, as a multifamily investor, you literally know about the best alternative investment on the planet. And that alternative investment on the planet is, of course, real estate. And it's recession resilient. And we saw that in 2008. We saw it again during COVID. The down markets are very, very limited, and the up markets are fantastic. The appreciation is above average. Typically in our deals, when we market a deal to our investors, we get a 15 to 18% average annual return on the money. That beats the stock market by almost 2. Then there's cash flow, really meaningful cash flow, 5 or 6% at a minimum. And so it really makes a difference. And then it has tax benefits. And that is really cool because when we do like a cost segregation, for example, you can really take advantage of the tax laws and depreciation and offset any kind of income you get from those tax losses. And then there's something called a 1031 tax deferred exchange, where when you sell, you can actually do a 1031 exchange and defer those taxes even further. And so by using some tax tools, you actually pay no or very little taxes, and that's really, really cool. And it's an inflation hedge. So when interest rates started going up and inflation went at 9%, during that time, rents went up by 25% in many parts of the United States. And while that is bad for the average person, if you're a landlord, you own real estate, it was amazing because the valuation of real estate went through the roof. During multifamily, I can't speak for other ones, like office obviously was quite a bit different from that. But it's an amazing inflation hedge because it's a real asset, right? People always need a roof under their head, and it doesn't really matter what happens with the currency. That is always going to be the case. So this is why people with money who invest in the stock market really want to talk to you. And this is why you have something of value to provide for them. Now, the other problem that you may have is that you might think that you can't raise money without a deal, and this is certainly true. You need a deal, otherwise, what are you gonna talk to about your investors? And so this is kind of a chicken egg problem because when you actually get a deal under contract, there's not enough time to raise money, and that's also a problem. So there's this chicken egg problem. People can't reconcile that in their head, and they're kind of stuck. So I want to share with you kind of how we solve this problem. This is the secret to raising money now, even if you don't have a deal, and this allows you to get financial commitments long before you start making offers, right? So this is how we do it. It's really called the sample deal package. The sample deal package is an investor package based on a real deal. It's got pictures. It's got information about the market, about the business plan. It's got some financials in it. Everything about it is real, except for the fact that you don't actually have it under contract. Now, you tell your investors this is not a real deal you have under contract, but it's substantially like a real deal. Therefore, let's have a conversation. We use it as a conversation piece to have meetings with someone and say, hey, here's what this deal is going to look like. Ask me all your questions right now. This is where you get the big questions out of the way. Well, why should I invest in multifamily? What are the risks? What are the benefits? Why should I invest with you? What is your team, right? It's going to take a minute to answer these questions. Because when you get a real deal under contract, you don't want to have these long conversations. You want to already have that done. So what this allows you to do is to get these longer conversations out of the way. And at the end, you kind of say, hey, if I found you a deal like that, how likely would you be to invest $50,000 in this? And they're like, oh yeah, I'd be pretty interested. Okay, cool. So now you have what's called a soft commit, a financial soft commit for investing in a deal. So now when you get a real live deal, okay, things happen very quickly. So you're staying in touch with your investors you've had meetings with. Maybe you email them every once in a while, send them a text message, and now you send them the real deal, and they recognize it because they already saw something like it. Now they're not asking you the big questions. Now they're going to ask you very specific questions that can be answered pretty quickly. They've already built a certain trust with you. And so now through, magically, you can raise hundreds of thousands of dollars within days. That's the secret to raising money. And you can do that right now. In fact, if you start working with us, as soon as you become part of the deal ready process, when you're getting your education, you're building your team, is actually creating a sample deal package. So now when you're done, you become deal ready. You have, using the right language, you have a team behind you. Now you can talk to brokers, but now you also have the sample deal package. So when some investor is interested in finding more, you can say, let's have a meeting, and you bring this with you to that meeting as a leave behind. They can take it at home, look at it, ask you questions as if it's a real deal. That's how we overcome that chicken egg problem, and that allows you to raise money now long before you start making offers. And that's pretty cool because if you had 5 people, soft commits of 5 people at $50,000 each, you got $250,000 behind you. How much confidence would you feel in now making an offer on $1 million property, right? Fairly confident. I mean, there's no guarantees, and 1 or 2 people may drop out, right? But a lot better than having no financial commitments at all, and now you're biting your teeth, your nails on how are you going to try to raise money. So that is how we overcome that situation. Let's talk about another objection to raising money, and that is, I can't find people with money. I don't know anyone with any money. How do I do that, right? And so I'm going to share with you kind of how to find investors in your backyard. If you kind of take a piece of paper and you write down all the different groups that you're part of, you actually will realize and recognize that you know more people than you think. So on a piece of paper, you put a bubble and put you in there, right? Your name. And then put in there a bubble called friends and family, maybe coworkers, I don't know, maybe the country club, maybe some religious groups you're part of, professional associations, things of that nature, kids, their parents, other parents, rec sports leagues, college graduate school, Boy Scouts, social media friends and followers, right? And look at all those things and those groups. And then what you start doing is you start actually writing down the names under each of those things. And you will now create a list of that, and you'll probably come up with like 30, 50 people at least, and that you can start speaking with as well. And so now once you have that list, you can actually start reaching out to them, and you're not raising money to them per se. You're simply starting to talk to them about real estate. Because you don't say, hey, can you wire me $100,000? That's not going to work. But what you can start doing as you get into those things is you can have more intentional conversations. How many times do we have what I call stupid conversations with people that really go nowhere? We're talking about politics and sports and the weather. Okay, it's fine if you like that. Okay. But be a little more intentional about the conversation, steer the conversation maybe towards investing or sharing with you your interest in real estate. Just start talking about real estate so they hear you talking about real estate. So when you actually talk to them a little bit more about, let's say, apartments or raising money, it's not an unnatural act. Now, when you do speak to them, okay, you obviously you'll have, let's say, 30, 50 people on this list. Eventually, you're going to run out of people to speak with. And this is what you do for that never to happen. And that is you get referrals, right? So if you, in theory, for every person you speak to, on average, you get at least one referral, you never run out of people to talk to. Make sense? So you start with your inner circle of people you already know, and you start getting referrals from that point forward. So one of my partners, his name is Garrett Lynch, Nighthawk Equity, and he tells a story where he worked for Cutco Knives. You may be familiar with them. They're door-to-door, sold door-to-door, and most people flame out in the first 2 weeks because they run out of people to talk with. But Cutco actually teaches you how to get referrals, right? So when you go to someone's house and you get invited in to give a pitch on the knives, even if you don't buy anything, you're taught to never leave there with no less than 5 other referrals. 5 referrals, 10 referrals, crazy. I don't even know that many people, but how about this? Can I give you 2? Okay. So now you're leading 2 referrals. And what they recommend is that they don't just give you their name and number. No, I want you to send a group text to that introducing me and then tell them that I will be calling them. It's a warm introduction. And that's awesome. Use that same thing for investors. When you speak to anyone, number one, you have a great conversation. Hey, who else should I talk to? People always know other people, even people that you think don't have any money or don't have any money, they will always know someone. You always follow that because people always know someone. So always get referrals and you never run out of investors to speak with. So while you never run out of people when you get referrals, there's other things you can do as well. Do that first though, master that first, and then layer these other things on top of that. So old contacts. If you look in your Gmail or your Outlook or whatever you're using, you probably have hundreds, if not thousands of contacts in there. Many of them you haven't talked to in years. So look through that and make a list of people that you wouldn't mind maybe reaching out to and reconnecting. And the great way to do that is to take that list, and you might have 1,000 contacts in there, is load them up in an email system like, for example, MailChimp. All right, MailChimp is one of those systems that's very affordable, like $10 a month. It allows you to email to a list. And imagine now you are creating a newsletter to your lost friends and coworkers and neighbors, for example, and you say, hey, I'm so sorry. I've done a really bad job staying in touch. I just want to start a newsletter a little bit and share with you my life of what's going on, and would love to hear back from you. And once a month, you send out an update. Like you get at Christmas, people write, what happened in a year in review. Well, you do it on a monthly basis. And in there, you mention the fact that you're getting into apartments. Now, you're not going to go into, hey, let's talk about apartments investing together. No, you first what you just reconnect with them and start an email dialogue and maybe some phone conversations. And now you're expanding what is now your inner circle. The other thing you can do is you can join various communities or online communities, virtual communities. Bigger Pockets is one of them. Ours is called Dealmaker Mastermind. They're really all over the place. Look for people that are real estate investors and just join them and start the dialogue. I definitely want to attend events, right? Events like meetups, there's perfect ones, conferences as well. And then eventually, you can also connect online, have conversations on LinkedIn, for example, social media. And you start doing all these things and you're constantly expanding your network. Now, one of the things I want to warn about is that there's some people who are teaching the capital raising easy button. And I just mentioned social media and online, and what they're teaching is basically it's easy to go online and raise capital that way. And I want to share with you that it's not the case. You can't just hop on social media and start raising money. It doesn't work that way. It sounds good, but there actually is no easy button to raising money. And that's because you can't really start raising money until online until you can raise it in person. And because you got to build trust, you have to build trust with people on the one hand, and number two, you really need to understand how to raise money. You have to understand what people are thinking, what investors are thinking, what they want, what they're afraid of, what their questions are going to be, what your message is going to be, or even your pitch. How are you going to go online? How are you going to amplify a message that you don't even know? It makes no sense. So this is why my advice really is learn how to raise one at a time. You can raise $500,000 that way, even $1 million before you actually go online and kind of expand that. So don't look for the easy button, but do what I said and start raising money one-on-one and get referrals and then slowly expand your network. And then eventually you can take that online. Let's talk about taking money from friends and family. I hear like, oh, I don't want to take money from friends and family because I don't want to beg them or feel like I'm bothering them or I don't lose their money. First of all, you shouldn't lose anyone's money. Friends and family or your own, doesn't really matter. And so really, how do you talk to investors without pitching them? Number one, stop trying to raise money. Instead, go back to what I said earlier about what stock market investors really want. You can help them with a problem. And so share your excitement, your enthusiasm. Hey, I discovered this cool investing thing. It actually is higher returns, cash flow, and tax benefits. And that could be very interesting to somebody. And really start educating investors. And you're not really pitching them. You're not selling them. You're not manipulating them. You're simply sharing your enthusiasm. You're educating people. And if they're interested, they're going to lean in. And they're going to ask you questions, and now you can set a meeting. So if someone's interested and you set a meeting, here's kind of how you conduct that first meeting. You build rapport as you always would with a meeting, and then talk about your team. Start talking proactively about your team that you built, because I'm going to assume you don't have any track record, which is fine. Talk about the team you built, which is a prerequisite here. We talked about it in a previous episode when you get deal ready and how you build your team. Talk about your team, and then obviously answer questions and address objections. As you start talking to investors, this is why it's important to do this one-on-one, you will get the same questions and objections from different investors. So instead of waiting for that question, you are going to address it proactively. You're going to create down essentially your top 10 questions. And as you talk about yourself, hey, talk about this, you're going to proactively address those over time. Then you're going to review the sample deal package. You're not going to go into gruesome detail in the meeting because a lot of little gobbledygook in there, but you're going to say, here's this cool little sample deal package. It'll be substantially like the real deal. I want you to read it. And let's talk again next week. Ask me some questions as if this were a real deal, because when a real deal happens, things happen kind of quickly. So then you walk through the closing logistics. Hey, if I do get a live deal, here's what happens. Walk them through. And what you're looking for is a verbal soft commit. Hey, if I found you a deal like that, substantially like that, how interested would you be in investing? And get them to do a soft commit. And if not, address their objections, etc., and maybe set another meeting so that they are interested. And then agree on next steps. Here's the next steps. We're going to stay in touch with each other. And that's very important, because when you have a meeting, you may be doing this up front where you're not even making offers yet. That's fine. So it may be 2, 3, 4, 5, 6 months even until you have your first deal under contact. And so stay in touch with them. Again, a great tool is like a MailChimp, a newsletter style. Every time you have a meeting, an investor meeting, you actually have a separate newsletter where you're providing maybe updates every couple of weeks. Hey, I visited this property. It was pretty cool. Didn't really fit our criteria. Moving on. Oh, I took this seminar. I joined the mentoring program. I did this thing, right? I learned something cool about this thing. And so you're staying in touch with your investors in a real estate context. So you might have two lists. You got your old contacts list, and then you have your investor list where you stay in touch with them. Yeah, and then when you get a live deal, this is how you raise capital in days. You send out the real package, right, to that investor list. You've already built that email list, and you answer questions. You can do that also with a webinar. That's very, very good. So you've met with 20, 30 people. You want to get everybody together on a Zoom call, and then you answer questions. And then you confirm the previous commitment. Hey, are you still good, et cetera? Get another soft commit. And now it's time for them to review and sign the documents and wire the funds. And that's really how you raise capital in just a few days if you do all this work up front. Now, it's very important that you learn how to raise capital one-on-one like I talked about, but there's actually another way where you can raise vastly more money in the same amount of time. And I learned this, as usual, the hard way. I had this deal under contract. I bought a deal, 46 unit in Birmingham. This was back in 2018 under contract for $1.7 million, and I barely was able to raise a $650,000. It was awful, right? Because I had a little bit of track record there, I had a little bit of a list, but I made all kinds of mistakes that I'm sharing with now. I didn't stay in touch with that list, so when I actually did a webinar, the list was cold, and I could barely raise the money. And then I kind of learned this who, not how mentality I talk about a lot, where it's really about not only the team but also your partnerships. And a year later, I discovered that this thing called joint ventures, there's capital raisers out there who actually have access to capital, and their biggest problem is deal flow, right? And so I aligned myself with one of these capital raisers, and we bought a $3.2 million, a 224 unit in Memphis worth $9 million, and we raised 3.2. And yes, I did raise some as well, about $1 million at the time. It was incrementally higher than the 650 I could barely raise, but the other partner brought in the vast majority of that capital. And it was an eye opener about this who, not how mentality, and the whole idea about joint venturing. So yes, you should learn how to raise capital one-on-one. Important skill to have, even if you're a deal finder, certainly if you're a capital raiser. But number two is this joint venturing. So especially if you're a deal finder, a very powerful way and a recommended way to raise more money is to align yourself with a capital raiser. And in our ecosystem, for example, there's probably a good solid 50-50 split between capital raisers and deal finders. So if you're more on the deal finder side, yes, you should still have meetings with investors, but you should start networking to find capital raisers and build up a little bit of a pipeline of capital raisers. Maybe 5 or 10 people. You meet them in various communities like we talked about earlier. You say, hey, I have deal flow. What access to capital do you have? Like, even if you went to our events, we actually have little stickers on there that says, I'm a deal finder, capital raiser. Sometimes people are a bit of both. So what I'm saying is, go ahead and network more intentionally at meetups, conferences, online communities, Zoom calls, LinkedIn. And so this is really a very, very powerful way to scale your apartment building investing business. So if you want to scale your real estate investing, then you definitely have to learn how to raise capital. Now, it's not very complicated to do that, but you need some things. You do need to follow the right system. You don't want to have to reinvent the wheel. It takes too long. So follow the right system. Follow, for example, if you work with us, we can follow our system, but follow the capital raising, learn how to raise capital, and then plug into the right network, because you need a right network where there's a good mix of deal finders and capital raisers. So find out what that right network is. And, we'd love to work with you as well, because we have those things. We specialize in helping people scale the real estate portfolio. And one of the very key components, obviously, is the raising capital part. So we won't even not only just teach you how to do that yourself, but plug you in if you're a deal finder and connect you with several dozen capital raisers who are also looking for deals as well. And so make sure that you plug in, and we'd love to work with you on that. If that's something you right now, you kind of want to get going, you feel like you could use help in raising capital, do bigger deals faster, then let's have that conversation. Go to thefreedompodcast.com, thefreedompodcast.com, and you can book a call with us and just have an exploratory conversation about what it'd be like working with us so that we can help you scale as well. So hopefully you were inspired by that. Raising capital is a very powerful tool to scale your real estate portfolio. Don't be afraid of it. It's actually much easier than you think. And it's a bit addictive as well if you can raise money, and you're actually putting investors into opportunities they could not do on their own because they're too big. And this is really an opportunity for everybody. So go out there, raise some capital. Here's to financial freedom.